The question is, should you use limit orders or market orders to enter a trading system strategy? And if you take a look at this setup, you will see that this is the setup with market orders. We're using market orders right here, and this tests well back to 2007. This is with slippage and commission. We have slippage and commission in this setup, $25 round turn. And you see 43.02 average trade profit, 46.3750 drawdown, 11.02 net profit as a percentage of drawdown. This is back to 2007. We've had this strategy for a long time. And you see the equity curve. It did well until about 2016. Then it went sideways, and it broke out this year, and it's pulled back quite a bit. I anticipated that it would break out this year. It has, but it's pulled back some. And so taking a look at this strategy again, I still think it's a good risk to reward and time to trade it based on the pullback and based on the early success that it's had this year. But we use market orders. Can we improve this strategy with limit orders? That is the question. So to format the strategy, it's the same strategy that I currently have for Soybeans Day Trader 3, but I've added some inputs, and I've called this Grains Day Trader 3 2022. There are no rule changes other than the fact that you can select between market order or limit order. And if you select a limit order, you get in for buy signals, you get on the close -0 on a limit, shorts close plus a 0 on a limit. You could add some points to that, like you could add 0.25 or 0.5, but these are 1 minute bars. So keep in mind the range of that bar. Don't add anything like 5 or 10, because in 1 minute, most of the time 1 minute bars don't trade more than a couple of points in soybeans, a couple of cents in soybeans. So you could have 0.25 cents or 0.5 cents potentially. The higher this number is, then the less trades you're going to get. So let's look at it with limit orders, but let's first take a look at it with market orders. So with market orders, 43 average trade profit, 11.0296. Here's the performance graph. So same strategy setup. We're just entering in on a limit order. You getting in on the close -0 or the for longs, or the close +0 on a limit order instead of just throwing a market order at the market. So lately there has been more slippage. So let's change this from market order false to limit order true, and then we'll just keep that at 0. So it's a similar approach. And then I'm going to close this, and we're going to let it update, and then I'll pause the video while it's updating. So taking a look at this setup, going back to 2007 once again with slippage and commission, you get $30 instead of 43, and your drawdown goes from 46.37 to 62.50, and your total net profit is decreased from 51.150 to 34.356, and your equity curve looks like this. Worst equity curve. So I'm still looking for a way to improve this strategy, but limit orders is not the best way to do that. It is down on the year instead of up, and so you can see I'm going to go back. I'm going to show you this. On September the 7th, it missed a trade. So this continues to be something that I continue to see in my back testing and trading systems. Many traders, they want to use limit orders to prevent slippage, but there was a big short trade on September the 7th on the market order version that was missed on the limit order version. So whenever you try to save on slippage and commission, you miss the biggest trades, and that's why the performance is worse. I'm going to switch it back to market order so we can see this trade, and we're going to look at it once again. And once again, I'm going to try to improve this strategy, see if there's some things I can do to improve this strategy to get us more average trade profit in 2022 than we've been getting. But the limit order approach is not the best. It's counterintuitive. Sometimes, using a stop order works better because you're trading in the direction of the move. And so the concept that the more slippage you get, the better the trade exists. And so I'm going to pause the video while this updates. So here is the trade that was missed on the limit order version. Because it was waiting for a limit, it did not get filled and missed a very big winner here on Soybeans Day Trade 3. Let's look at the performance summary again. and you can see the improvement. Let's look at the periodical returns, up 2775 on the year versus down, I think it was 3,000. So big difference. Market orders are better than limit orders on the back test. Now if you get, if we start getting, massive slippage, we've had more greater than average slippage lately, but get to track it over the long term. So continue to track the slippage as well as looking for ways to improve this in 2022. But the conclusion for now is that I would still rather use market orders than limit orders when trading soybeans day trader 3.